Okay, hi everybody. I'm so glad you're able to join me and Benny today. Today my presentation is about a behavioral cash flow management system, specifically known as Profit First. Without much ado, let's just go chime in. So I need to go. Okay. So about me, I am a CPA, as Benny intimated. I love working with owners and operators of childcare centers. And why is this? I am a single mom. My son is now 9 years old. And in the early years of his life, I relied heavily on childcare providers. And with that, I developed a very strong appreciation for what you guys do. I really appreciated taking care of our children. Um, I was just surprised that you even have curriculums for infants and 2-year-olds and preschoolers. So I love that kind of stuff, and I'm so appreciative. My aim as a CPA is to drive your business to profitability. Okay. Um, People that own their businesses work extra hard. They take a lot of risks. Not everybody can run a business. And from that group, not everybody can take care of other people's children 8, 10, 12 hours a day. Okay. And nurture these kids and put in education and have them ready for kindergarten. Whatever service that childcare owners provide, not everybody can do it. And I believe over time, the industry is way more appreciated than it was. And especially because of the pandemic, we all realize how important the early childhood education industry is to the economy. So that said, I want to present something to you that will hopefully drive your business to profitability. And for me, I didn't start business just to pay bills. I want to be profitable. I want it to mean something. In the beginning of your business, or even if your business is more mature, you will realize that you're spending a lot of time, a lot of hours nurturing this business and getting it to a point of success. Okay, so my job here is to help you as a business owner drive the profitability in the right direction. So, a little bit of what I'm going to talk about. The first thing I want us to understand is that if you are working with a CPA, a bookkeeper, an accountant, chances are they're tracking your numbers for you. Okay, so at the end of the month, hopefully you're getting a report. This report is typically the profit and loss account, the balance sheet account, and the cash flow account. Okay, and as an accountant, as a classically trained accountant, I was taught that when you have revenue and you take out expenses, whatever is left is profit. That's the profit that, as the owner, you get to keep for yourself. Okay? I wonder, amongst the audience members today, have you guys ever felt that you're working so hard in your business? You're taking care of other people's children, you're nurturing them, you're educating them, you're keeping them safe. And especially during the pandemic, there was a lot that was required of you. But at the end of all this, you have nothing to show. And worse still, in cases where you are being profitable, your accountant files your taxes and they said, congratulations, you owe the IRS X number of dollars, dollars that you don't even have, that you don't even see. Okay, so that's what today's webinar is all about. We want to start seeing these dollars. Okay, so traditionally, according to the US statistics, we have 28 million small businesses. Okay, and after 28 million, a large percentage of these businesses are not making any kind of money. They're living paycheck to paycheck. If you have employees, sometimes you're laying awake at night because you can barely make payroll. And in such times, you're going over to lenders and your bank and your line of credit, asking for a little bit of cash and liquidity to pay your employees. this is really not the way to run a business. Over time, the interest rates and the costs of financing the business can erode your profitability. So think about it. If there's 40 people in this webinar today, 2 out of every 10 is the only 2 are profitable. 8 people, 8 childcare owners that you know out of a group of 10, 8 of them are living paycheck to paycheck. Now, is this the reason you got into business? That is a question you have to ask yourself. Okay? And if the idea was to be profitable, even if you're running a nonprofit will definitely shut down and close if they're not making what we call net revenue, which is the equivalent of a profit. So what do we do to change this? Okay? The first thing is, I know I'm an accountant. I know I send you these reports, and maybe some of those reports don't make sense to you, right? I'm sending you a bunch of cash flows and I'm asking you to analyze this and analyze this expense, building expenses, staffing costs, and all this stuff. And you're like, oh my gosh, you're just, besides taking care of the kids, besides making sure that I'm paying my employees on time, now you want me to analyze a cash flow statement? And not just that, I'll give you a tax return, depending on your entity structure, that may even be so complex, you ain't got no time to review that. And so what we want to do is manage your cash from a behavioral standpoint. And that brings about what I call the Parkinson's law. Parkinson's law is a law that states that our demand upon a resource depends or tends to expand to match the supply of that resource. Meaning, as our demand grows, more people, more supply, more of that item is required. I have a couple of examples just to kind of put this in context. I am a, older individual, and to be honest, I'm struggling with my weight from time to time. I would like to be 10 pounds lighter so I can improve my BMIs and all that good stuff. And I know for a fact that if I eat less and I move a little bit more, I'll have a deficit in calories and therefore lose weight. Okay? But how do you change Olga's behavior so that she can eat less? I don't know if you guys are aware, but of late, when you go to the fast food restaurants, or if you go to any restaurant in general, the plate sizes are bigger than they were when you were younger. And especially for me, I'm originally from a country called Kenya. This super-sized, large-sized pizzas, and that doesn't exist, okay? So you notice that you go even to a 7-Eleven and you're getting a Slurpee, and they give you one big Slurpee in one large cup, and naturally, you're going to finish the whole, the contents of that container. So if they give you a small one, that is what you would drink. If they give you a large double cup, that is what you will consume. So Parkinson's law says that behaviorally, if I feed my family with smaller plates, seems as though that is what they're going to eat and they will be satisfied. But if I start introducing larger and larger and larger plates, chances are they're going to eat everything that's on that plate. I'm using another example here of a toothpaste example. So for example, in your cabinet, in your bathroom cabinet, you have a bunch, you go to Costco and you get 5 toothpastes at a go. It's very likely that your household members will not squeeze the last drop of toothpaste. As soon as they feel it's kind of flattened out, they're going to throw that used one and get a new one. Because in the cabinet, we have 10 tubes of toothpaste. Who cares if you left some in an old one? But what about if that was your last tube of toothpaste and you have to brush your teeth? Chances are you're going to roll it and squeeze it and get the last millimeter of toothpaste. So again, behaviorally, if you have more toothpaste, you're going to waste. But if you have just one tube and you happen to be away from home, you can't replace it, but you want your breath and you want to take care of your teeth, chances are you'll make use of that last tube to the last drop. we want to bring in this behavior, just like I spoke about the smaller plates. Hopefully, if I give you food in a smaller plate and just make sure that you eat the food in that plate, you are over time going to eat less and over time lose some weight. Okay, so that is what we aim to change with this system. Okay, remember we talked about the formula, the classical accountant's formula. They'll give you a report saying your gross revenue. This is the money you brought in, the money you brought in from your tuition, grants, interest income, whatever came in, right, is your revenue. And then we take out the expenses, and what's left over is the profit. So in the old formula, profit came in last. Okay, and so we didn't pay too much attention to the profit until we are either filing our taxes or you're getting that report at the end of the year, end of the month from your accountant, and you realize, oh, I had a good month. Oh, I have a bad month last month. So what I want us to do is focus first on the profit. So I'm just making a subtle change to your accounting formula. So what we're going to do is change that problem, okay? I want to bring in the sales, which is your revenue, tuition revenue, grants, interest income, and then focus second on the profit, okay? And then think about expenses last. Why am I doing this? It's because as an entrepreneur, if you own your own childcare, chances are you're the one that's taking the risk to take on this business. Not everybody runs a business. Look around you, your friends and family. How many of those have their own businesses? Okay, so I want to make sure that you focus on you as well. So think about profit first as self-care for business owners and self-care that's tied to the money in your bank account. Okay, so for profit first to work, okay, I'm going to have you do something that you probably may not be very comfortable with, but if you trust the system, it will work. I personally use it in my business, and I've been able to do certain things that previously I wasn't able to. For example, I'm now able to take vacations. Previously, wasn't taking any vacations because I'm worried about the money that's sitting in my bank account, and will I be able to pay to meet my obligations tomorrow? I was able to invest in certain other things other than running a CPA business. But that's besides the point. Let's talk about these bank accounts. At this point in your business, I'm making a very strong assumption. I'm making an assumption that you have a bank account where you run your business out of. Okay? So when you're getting money from your parents, you put money in a separate account. It doesn't matter whether you have a home daycare environment or a center. I would highly, highly recommend that you have a separate bank account. Why is this? For no other reason other than to have a separate entity. So your business is your business and your personal bank account is your personal bank account. Please, as business owners, do not use that account as your piggy bank. Do not use it to buy treats for your child. Have a separate bank account for your personal expenses, right? When you're running a business, I think that's a basic requirement. So back to the bank accounts. My expectation is you do have a bank account for your business, and I'm going to ask you to do something out of your comfort zone. I'm going to ask you to open 4 additional bank accounts. I'm going to go back to your bank. They're going to ask you for articles of incorporation. Why are you opening this? Da, da, da. Answer all those questions and go ahead and open 4 new accounts. Okay? And each account will have a specific purpose. And Profit First will help you figure out what these purposes are. Okay? Now, of the 4 accounts, I typically suggest that you open a checking account. Checking account doesn't come with interest income, but for the purposes of Profit First, my preference is that you open checking accounts. Okay. If you go into savings accounts, they have restrictions on how many times you can move money around. And a lot of times in your regular checking accounts, commercial savings accounts, interest rates are barely, they're so negligible. But again, if you do have a separate high yielding, high interest yielding account, yeah, go for it. However, I say, just open checking accounts. So the first one is going to be called the income account. I want you to set up this account as a depository account. And what do I mean by this? I want you to direct all the income from your business being deposited into that account. So when you're sending that bill to the parents, make sure the funds are directed into the income account. Okay? This is easy to set up, especially if you have, if you're using ProCare or, any of these CRMs that help you collect the money from the parents. You should just be able to go into your settings and change the account where the money is being collected. Okay, so the income account, depository account collects all the money. Okay, the second account you're going to open is called the profit account. Why profit account? And like I mentioned earlier, you are the owner. You're taking all the risks. You deserve to get a share of the profit from the business. So I want you to pay yourself first. Okay, so right off the bat, we're not talking about expenses. We are looking at Shannon, you made 30,000 last month. Of that 30,000, take a percentage of it and put it in the profit account. And that is for you and your family, for vacations, for any projects you have at home that is going to cover those costs. Number three is the tax account. Now, if your business is profitable, so we're talking about the 22% that are actually beyond the break-even point and you're making money, you're going to have to pay taxes, right? And paying taxes is not a bad thing. If you're running your own business and you're not paying taxes year over year over year, I think you need to reconsider, is this a true business? Because even at the level of a sole proprietor, there's something called social security taxes. The more you pay into that, the more you will get back when you retire. So if you've been running a business for over 50 years with nothing being deposited in your social security account, how much do you think you're going to be making from a retirement standpoint? So we want to be running businesses that actually afford us some sort of taxes that allows us to pay into social security. Okay? So the tax account comes in, so where I want you to start setting aside money every 2 weeks, and you're setting it into the tax account. When you file your taxes and your CPA tells you, hey, congratulations, you were profitable in 2023, and here is your tax bill, you should not panic. You should be able to take that amount and pay to the IRS or your state government. Number 4 is owner's pay account. This is the account for paying your regular bills, right? I know you're running a business, but you need a paycheck. Now, depending on the entity structure, you could draw a salary or you could take an owner's draw. But if you're running a salary and you live in the United States, chances are you have bills. You have to feed your family. You have rent, mortgage, payroll taxes, your home, your car expenses. I want you to open an account that will cover that. Okay. Lastly is the operating expenses account. If you want to be fancy, you can call it the OpEx account. And this, remember we talked about that initial account you've been running your businesses from? This is where you're paying payroll, you're paying your utilities, your rent for the business. Keep that one as your OpEx account. This is the account where you're running your business from. So just to give you a little bit of a visual, what are we going to do with all these accounts? We said income account gets all the money. And then every so often, I ask you to allocate funds that you have received into these 4 accounts that I mentioned. So working with a Profit First professional, they'll probably give you a percentage. There's also a book that I'm going to share with you at the end of this webinar that you can actually purchase and just follow the principles of that book. And so I would suggest, say, how about you, if you're making, say, 100,000 or 1 million a year in your childcare, take 10% of that, put it in your profit account. Okay, take 15% and put it in your tax account. Take another percentage, even 20, 30%, put it in your owner's pay. And the rest that's left is your operational expenses. So this means that you can only run your childcare out of the OPEX account. So remember how we squeezed that toothpaste and limited ourselves to the use of the toothpaste, or how we taught and trained ourselves to eat and be satisfied out of a smaller plate? That is what we're going to be doing with your bank accounts, right? So when you wake up in the morning and you log into your bank account, I only have $20,000 in my OPEX. What do I need to cut? Because I have payroll coming up, I have utilities coming up. How can I manage this business within the funds sitting in the operating account? And not just that, come tax time, you have money that you can pay in for your estimated quarterly taxes, okay? You have kids, you have a family. They see you working so hard. When do you take a break? When do you go on vacation? That money is coming from your profit account. You want to renew your kitchen, profit account. How about the bills for running your home? What about your contribution, your financial contribution to your household? That will come out of the owner's pay account. So if you follow this system, there's no confusion as to how much should I pay myself and where do I get this money. This money is going to come from these accounts that we've helped you set up. It may be a little confusing, but there is a book that actually explains this process. So don't panic about it. Take your time to read the book, but just remember there's going to be that difficult part of opening these bank accounts and determining the percentages to put into those accounts.
Olga, there's a quick question from Shannon in the chat, and she's asking, what percentage would you suggest to put into the profit account and the tax account?
Well, it depends, okay? Whenever I'm working with my clients, I have to be very specific. But in general terms, right, I would put 10% in a profit account. My formula is based on your gross revenue at the top. But in general, I would say 10% profit account, 15% on your tax account. Now, it works. You might file your taxes and your tax account say, oh, you owe 20%. But trust me, if you keep setting aside that 15% for your taxes, come tax time, you will have enough money to pay and cover your taxes.
Great, thank you.
Okay, so of course, you know, I'm a CPA that focuses on childcare. So other than providing this cash flow management services, what I like to do and gets me very excited is, apart from asking you to manage your cash flow, we can also help you reduce your taxes, right? And when it comes to tax reduction, okay, I invite you to do some research. Never ever take a strategy that doesn't sit well with you, okay? Things like putting aside money for retirement is a good strategy. It's a legal strategy, but you have to have the cash sitting somewhere for you to put it into retirement, okay? So my firm, what we do is we help childcare owners reduce their tax liability. If you want to do that, you can always reach out to me. But other than me, there's a lot of information. Talk to your CPA. They can help you reduce this tax liability. And the good news is that if you follow this system, you will have money and in your tax account. And if they are able to reduce your tax liability, boom, there you go, you have a bonus. This is the bonus that now you have more flexibility in spending. You don't have to give it all to Uncle Sam. Give Uncle Sam what is Uncle Sam's. But if you have money left because you have implemented legal common sense strategies to save your taxes, I think that's a double bonus for you, okay? The key is to start planning early, okay? So again, the whole idea is to drive up profitability to Pay yourself. Nobody is going to come in and pay you. You got to pay yourself first. Now, the book I was talking to, I have a copy right here. It's called Profit First by Mike Michalowicz. And in this book, he explains in detail how this whole process works. And if you feel a little, you want to kind of dip your toe in the pond just to see if it works, I do have an excerpt for the book. And Benny, if it's okay, I would like to share that excerpt later, or maybe in a couple of days after this webinar. And what it is just the first 2 chapters of the book. Once you read the first 2 chapters, it could kind of sink in about opening these bank accounts and the profitability and how the percentages work. So I'd invite you to either invest in the book. It's available on Amazon. I'm not getting anything out of it, but all I know is that it has worked for my firm. And I had a lot of experience in corporate America, never took any vacation. But now that I'm running my own business, I've been able to travel way more than I did before. And I'm thankful for that. So again, Profit First the book is available. This is something you can implement today. Okay. If this is only, if you really want a more advanced Profit First system, that is where you would reach out to a professional like myself, or the Profit First community. The only thing is I specialize in childcare. So I have a more intimate understanding of the childcare. But again, this is something that you can implement just by reading the book and working with your CPA, your accountant, to make sure that the allocations are making sense. Okay. So how we do it, the first thing we do is I conduct a profit assessment. Shannon had asked me about the percentages. I can go in and look at your numbers specifically for Shannon and come up with the percentages that work for you. If it seems, a little more, it can be intimidating, just use the percentages in the book. It'll still work great. Okay. Some people might worry that if I only put 40% in my OPEX account for childcare, don't worry about it. Tweak the numbers just a little bit. Maybe put 5% in the profit account and put that additional 5 in the OPEX account. It shouldn't be so difficult. And it's not an exact science. All I want from you is wake up in the morning, look at the OPEX account, for that month, this is how much I can spend because you have set aside money for other purposes. Second phase is the implementation. Once you've set up the bank accounts and you know your percentages, now you're going to have to be allocating monies to these accounts. The third phase, which is a very important phase, is profit maximization. Now, 2 things you can do to maximize your profits in the childcare industry. The first part is look at your revenue. Can you increase your revenue? What if you run a home daycare, and you're at the maximum license capacity? So you can only receive income for the number of kids you're licensed to have. Maybe you get grants, but typically there might be a cap on how much money you can make in your home daycare. In a center, you have more flexibility because you can have more kids, but we all know that in a center, you have more expenses. So the second piece of profit maximization is the reduction of expenses. Number 1, we started by forcing you to operate only out of the OPEX account. Number 2, we want to go line by line by line. How much are you paying for your rent? Is there any way you can negotiate that rent? Can you buy a building and pay a mortgage and reduce your outflow for rent? Let's look at in my profession, we do a lot of finance cost analysis. So if your parents are paying you by credit card, there's some credit card fees. Is there any way you can negotiate to just a slightly lower? Remember, there's so many transactions that happen in the childcare environment. So you have parents paying you weekly, monthly. Every time they swipe, there's a fee associated with that. Is there anything we can do about that? What about your utilities? What about supplies? We need to go line by line. And this is not something you do one time and it's done. No, this is something you want to do every quarter, every 6 months, to make sure that you didn't subscribe for some channel or some software that you're no longer using. You didn't subscribe or pay for accounting services that you're no longer using. So this is something that you actively conduct on a regular basis. And there is your profitability. Now, I know this is a lot, but I can attest that for me, it changed my life. I started Profit First, I think, in 2021. And since then, I've been able to achieve a lot of my goals. I'm sure as business owners, you set out your goals, right? And then you take that piece of paper and read it 3 years later, and you're like, oh my gosh, I bought the house, I bought the car, I paid off my mortgage. And sometimes it's actually crazy if you do write down your goals and then you focus on them and you find a year or two later you've actually achieved them. That is what I want for you, okay, as a childcare provider. And why do I want that for you? You do, in my opinion, one of the most important jobs. We say our kids are the most important people in our lives, and you are entrusted to take care of other people's kids. You should also be paid well from that, and that payment will come out of your business. And that is what Profit First is. Now, I know I said a lot, but if you do have questions for me, I appreciate if you can, this is the time you can ask me any questions or clarification.
And Angie asked in the chat if you help business owners who are ready to sell.
Okay, that's yes. The answer is yes, but I have to be honest. I work with other professionals to help sell your business. And let me tell you, when people are evaluating your business, your cash flow is going to be an important part of that valuation. So if you're barely breaking even, right? Your expenses are too high, your payroll is out of control, your business does not become attractive, right? And so you want a system of cash flow that shows that this is a cash positive business. And having that Profit First will definitely show that. So like I said, I'm a CPA and I do mostly, transactional accounting and tax prep and tax advisory, but I do have professionals, have a legal team. I also have financiers that I work with that can help value your business at a higher rate, and therefore you get the maximum profit out of your sale.
Wonderful. Angie said thank you in the chat. Shannon sent another message. I hear many people to become a S Corp, then many say won't help. What are your thoughts?
Yeah, I'll give you the classical accountant response. It depends. Now, S Corp, what it is, it's okay. So before you become an S Corp, you need to have an LLC, a legal limited liability company, already registered. Okay. If you're a sole proprietorship and you don't have that registration, you might want to talk to a lawyer to get that LLC. Now, S Corp is an election. And what it does is that it can save you money on your taxes, specifically on what they call FICA taxes, okay, self-employment taxes. When you're an S Corp, you can save money on your taxes, but there's a catch, okay? The catch is, what is your net profit looking like? Sometimes an S Corp does not work. To me, the threshold is between a net profit of 50 to 70K a year. What I mean by this is the cost benefit analysis doesn't really work well with an S Corp if you're making less than 50,000 net profit a year. And the reason for this is because an S Corp is a different animal by itself. If I'm working with you and you say you are an S Corp, you better have a good accounting bookkeeping system. I want you to give me a balance sheet that is clean and a P&L that is clean, okay? Because the S Corp return requires that we include all your financials on the face of the tax return. Number two, with an S Corp, you're gonna have to incur higher costs in filing your tax returns. So if previously you were paying $300, $400, $500 to file your tax return, and then now you're an S Corp, the CPA or the tax professional is going to charge you a whole lot more to file this tax return. So as a business owner, you have to consider, is it worth it to pay more? Number three, if you're an S Corp, you're going to have to pay yourself a salary. That means you're going to go to these payroll companies, run payroll, and pay yourself as the business owner. That is a requirement. If you don't do that, you might get audited and charged a lot of fees and penalties by the IRS. Okay, so before you go into S Corp, number one, is there a legal separation between you and the business? Do not commingle in any circumstance whatsoever. Number two, are you willing to run payroll? Are you making at least more than 50,000? And then this 50,000 number is not an exact number, right? It really depends on your business, and you really need to work with your CPA to determine that point when you need to file change into an S Corp. The beauty of an S Corp is it saves you a whole bunch of money on taxes, but it will require you to be more involved in your finances. You're going to have to work very closely with your bookkeeper and accountant. Don't bury your head in the sand. I want you to demand that you get financials every month. And I want you to also go into profit first. So if you're going to be paying yourself, guess what? That money will come out of the owner's pay account of your profit first. So it's a loaded answer, but whenever it comes to whether or not to go with S Corp, let your CPA run the numbers for you. If you're making less than 50, it might not make financial sense. Do you want to start running payroll every month? The payroll company will charge you. There's a lot of compliance associated with payroll. Do you really want to file and pay an extra $1,000, $2,000 in your taxes? If that is something you don't want to do, then S Corp might not be for you. But on the other hand, net, you will save money on your taxes.
And I will mention, you can run your payroll in Playground. So that's, reach out to us if that's of interest, and we're happy to set you up. But it's still within the same system and very easy to do.
Correct. Yes. So that is something it's an added, task that you have to add to your monthly or bi-weekly processes.
Anna just asked another question. Will you get penalized if you don't pay yourself as a sole proprietor when starting out as a small family center?
Okay, sole proprietorship, or the way you pay yourself is actually taking money out of your business account into your personal account. You're not supposed to run a payroll if you're a sole proprietor. I will repeat that. You're not supposed to run a payroll if you are a sole proprietor. The way you pay yourself is by taking a transfer or a draw out of the business account into your personal account. When you file your taxes at the end of the year, whatever your net profit is, your taxes are going to be calculated based on the net profit on your tax return. Okay? If you go running a payroll, you end up double paying on what they call FICA, Social Security and Medicare taxes. So unless you like paying the IRS way too much, you don't need to run a payroll, but rather draw money out of the business. And the question is, how much do I pay myself? How about you start using profit first and take a percentage of the money coming in and just pay yourself? I hope that helps.
Wonderful. If anyone else has any questions, feel free to either unmute yourself or send them to the chat. And thank you so much, Olga, for this wonderful session. A lot of information, and I think that book recommendation you gave out would be great to anyone looking to become more, well-versed in the business side of running their program.
Mm-hmm.
Anybody else have any questions? Victoria has a question. Victoria, you can either unmute yourself if you would like. Yep, go ahead.
Hey, Olga, I'm a little bit late. I missed some of the portions, but I did have a question. I am an S Corp, and I kind of did this a little bit premature, is what I've been told. And I'm a center just opening up. And so we don't have a facility yet. We're just starting out all the things. And I was told that if we don't open our center this year, basically we wouldn't be able to claim anything as far as like our first startup cost or anything like that we're putting into our business to open it within the next 6 months to a year. Is that true?
Yeah, I say yes. And the IRS will typically use a litmus test to determine when a business has started. Okay. So I know when you're first starting out, there's money you're spending to set things up. It could be construction, remodeling, furniture, supplies you're purchasing, right? But the IRS needs to know, when does this business start? One test is, when did you start earning money? When was your first client a client? Do you have a revenue? At that point where revenue starts could be the point where your business starts. So we're in 2024, you're in the process of opening a childcare, you have all these expenses, but no revenue to show for it. Okay? To be on the conservative side, I would rather claim those expenses when I can justify them with a revenue. Another test that I personally use for the childcare industry is, when did you get your license? When did the state say, we recognize Center A as a business and we've registered it with our local state? So that's another litmus test I use. If you have neither, all those expenses that you incurred can be used to offset your taxes in 2025. So they're not lost. You will claim them as startup costs in 2025 when 100% you're sure you started this business and you're starting to receive kids, or you have been certified to open your doors to the public. Okay? And this is a less aggressive, it's a more conservative approach. But in case you get audited, the IRS, the first thing you want to know is this a business or is this a hobby? Prove to me it's a business, or are you just spending money? So one way to certify that it's a business, I'm registered, I'm getting students, and yes, indeed, I'm a business, and my goal is profitability. First couple of years, if you made a profit, you've killed it. A lot of businesses make losses in the first 2 to 3 years, and that is understandable, right? But to be conservative, wait until you have your first client to claim all those expenses. Track them, please. Track each and every penny.
Another question in the chat from Anna. She's looking for a CPA that specializes in in-home childcare businesses. She hasn't had any luck finding, and she's asking if you have any suggestions on how to or where to look. She's brand new.
Oh, could you repeat that? She's looking for a tax.
She's looking for a CPA that focuses on in-home childcare, and she's looking for where to go. Can she reach out to you after the event?
Oh, absolutely, absolutely. Especially a home childcare, you have some very, specific nuances. You have opportunities to claim more on your home office than the rest of us individuals. You claim time, space, space that is partially used. And I believe Playground also provides those statistics for you. So you have an idea of how much to claim. But yes, you can certainly reach out to me. Congratulations on starting your business. Not everybody's going to do it. Not everybody can take care of kids. And so I'm very excited for you. It's going to be a very interesting ride. But if you start Profit First now,
I will share. I'll share Olga's information over email as well in the follow-up email. That way everyone can get in touch with her if they have any other questions. And then I still see, Victoria, you have your hand raised. Do you still have another question? Nope. Okay, so her hand went down. Wonderful. Well, if anybody else has any questions, I will send over Olga's information over email. And I just want to say thank you, Olga, for joining. Always super informative sessions. And it's great having you to partner with us. And so anyone that registered, you'll get the recording, and you can always reach out to us with any questions you might have. So thank you, everyone, for joining.
Thank you as well for having me, Benny. I appreciate it.
Wonderful. We're going to get some thank you messages in the chat. So very exciting. Thank you, everybody.
Bye-bye.